Hi guys, welcome back to my channel, the best place to be wherever you are on your wealth journey right now. Today I want to talk about life cover and critical illness insurance. What exactly is it? Why do you need it? And how does it work? But first I will say that if you're interested in more videos on personal finance, mindset and wealth creation, do subscribe to my channel just underneath this video for plenty more just like this one. Okay, first of all, I do have a disclaimer in the description underneath this video, but I will say guys that this is not financial advice that I'm about to share with you. This is just information, and if you do want to go down the road of finding your own critical illness and in life insurance, I strongly recommend that you get a financial advisor to help you with it all, because they can look at your whole situation and give you the best advice. So life and critical illness cover then, what exactly have they got to do with your wealth journey? Because of course they're going to start taking money out of your pocket every month if you start paying towards them. Well, wealthy people know that it's very, very important, as well as to make money, to protect your money for future generations. And life and critical illness cover are two things that wealthy people do in order to protect their assets and make sure that their family and their loved ones are secure in case anything really bad happens. Another important part of protecting your assets is to get your lasting power of attorney sorted out. And I did a video on this last week, it's this one just up here, so do have a watch of that one and add it onto your to-do list if you haven't done it yet, because that's really, really important as well. So let's cover why you should bother with life and critical illness cover. Life insurance, as the name suggests, is an insurance policy to cover your life, which means that if you die, the policy will pay out a lump sum to your family. There are often caveats, so for example, insurance policies won't usually cover you if you commit suicide, but it is there in case something really bad happens. And it's also useful when you're looking to cover certain things. So for example, if you have a mortgage and you're worried that if something happens to you, your family won't be able to make the payment. So for example, if I drop dead tomorrow, let's say my husband working his job might not be able to make our monthly payments every month because I'm not here anymore, then I can take out a life insurance policy to cover my mortgage, which means that if I die, our whole mortgage gets paid off and my husband can still carry on working and he doesn't have to worry about having to repay the monthly mortgage anymore. And that gives me a lot of peace of mind. Otherwise, I worry that if something happens to me, he might have to sell the house, and obviously that's not what we want either. So, I want to make sure that he is set up with somewhere to live in the event of my death. So life cover pays out at the end of my life. And there are caveats here, and with life and critical illness insurance, you're usually asked to disclose your own medical history, your parents' and close relatives' medical history, and quite often you'll be asked for a doctor's assessment as well. When you pay for your insurance, you pay monthly or annually, you can do it either way, and the money that you pay is called a premium. Your premium will be higher the older you are, so it's a really good idea not to delay getting cover. Try and get it as quickly as you can, because obviously you're older tomorrow than you are today, so you want to get it sorted as quickly as you can. Your premium may also be high if you have a family history of illness, or if you have an unhealthy lifestyle. Now I'm putting that in parenthesis because it includes things like excessive smoking, excessive drinking, and being obese or overweight. And it might be that you're overweight because you're a champion rugby player or something, but obviously your premiums are still going to be expensive because you are deemed overweight, if you see what I mean. But overall, if we put ourselves in the shoes of the insurance companies, they want to know, are the people that we're insuring fit and healthy, and are we really likely to have to pay out? Because they don't want to, okay? At the end of the day, they don't want to have to pay out. You can even get some insurance companies now that encourage people to actively go to a gym, do running, swimming, exercise of any kind, because that helps them keep your premiums nice and low. But do keep that in mind when you're applying for your insurance. So let's start by looking at life cover, and then I'll move on to talking about critical illness cover. Now, the two broad types of life insurance that you're likely to come across are number one, term assurance, and number two, whole of life. Term assurance is a life insurance policy that pays out if you die within a certain time frame. So with term assurance, you can choose the time frame and you can also choose how much is paid out. Having said that, there are three different types of term assurance that you could go for. So let's go through them. Number one is level term assurance. Level term assurance is where the payout stays the same no matter when you die, providing you die within the specified time frame. So for example, you might want your policy to cover you for £300,000 right up until your 70th birthday. Now, providing you keep up your premiums, if you die before your 70th 70th birthday, the insurance policy will pay out and your beneficiaries will get a lump sum of £300,000. In this example, the term assurance expires on your 70th birthday. So if you pop your clogs the day after your 70th birthday, then there'll be no payout for your beneficiaries. It's worth noting as well that with any term assurance, once your policy expires, there is no payout and you don't get your premiums back either. That's not how life insurance works. So for example, when I was mortgage broking, we also used to organise everybody's life cover as well, if they needed it. And I got a phone call one day from a chap who'd had his life insurance organised several years ago. And he called me up and he said, what about my premiums? Can I have them back, please? And I had to gently explain to him that that's not how it works. He couldn't get his premiums back. With life insurance, it's use it or lose it, which is why it's really, really important to do this as quickly as you can now so that your premiums remain nice and low. Okay, next we have decreasing term assurance. This type of policy is still for a certain term, but the amount it pays out goes down as time goes on. And your decreasing term assurance is most commonly used to cover a repayment mortgage. Now, I talked about repayment and interest only mortgages in this video just up here, so do have a watch of that one if you haven't. But if I'm on a repayment mortgage, I'm repaying both the interest and the capital on the mortgage every single month. So if I start with a mortgage of £300,000, for example, over a 25-year term, by the end of the 25-year mortgage term, I don't owe the bank any money and my mortgage is paid off. But what happens within that 25 years? I probably still want to make sure that my family can manage if something happens to me within that time frame before we've paid the mortgage off. So by taking out a decreasing term assurance, that gives me the reassurance that the mortgage will be paid should anything happen to me. And with the decreasing term assurance, it goes down as my mortgage goes down. So as I have less and less to pay to the bank, I also have less and less being paid out in the event of something happening. You may also find that some mortgage lenders want you to have life insurance cover in place as part of the terms of their mortgage. So do watch out for that, and if that is the case, your mortgage broker will be able to advise you on which policy to get. But it's likely to be a decreasing term assurance if your mortgage is on a repayment basis. Lastly, we have increasing term assurance. As the name suggests, this increases over time, so it's the opposite of a decreasing term assurance. Instead, this is to cover inflation. Now, you still have to die within a specified time frame, but the later that happens, the more the policy will pay out. And the idea behind this is that it combats inflation. So let's say, for example, you wanted to take out an insurance policy of £200,000 just in case you died, and you've decided that that would be quite a nice nest egg for your family going forward if something happened to you. But you decide that today, and that's £200,000 in today's money. But what if you don't pop your clogs for another 30 or 40 years? Now, bearing in mind that the government's inflation target is currently 2% per year, the £200,000 in today's money is not going to be worth £200,000 in 30 to 40 years' time. It's going to be worth a lot less than that. So to cover that shortfall, you go for an increasing term assurance, which increases with inflation every single year until you die. So that when you do finally pop your clogs, your family still benefit from the same amount of money, just as if you were to drop dead today. Now, term assurance is really useful because it pays out at a time when you and your family need it the most, which is when you're working and something happens and you then haven't got that income to fall back on and rely upon. And it's also good because it's the cheaper form of life insurance. However, the problem with term assurance, of course, is that it only pays out within the term. And of course, none of us know when we're going to pop off. We don't have a crystal ball. We simply don't know this stuff. So some of you are probably there thinking, well, hold on a second. If I pay my premiums and then I don't die within the term, surely that's just a big fat waste of all of my hard-earned money. And Murphy's Law is that I would take an insurance policy right up to my 70th birthday and then drop dead the next day. So, you know, in that way, it's not a particularly great thing to do. So for those of you thinking in that vein and thinking, I need something a little bit more robust than that, something a bit more certain, you can go for what we call whole of life cover. Now, whole of life cover, as the name suggests, covers you for the whole of your life. So right up until the day you die, no matter when that is. So it's not bound by a term, by a time frame. So whether you die next week or you live to 100 and beyond, the insurance policy will still pay out regardless. Now, with your whole of life, because the policy is guaranteed to pay out at some point, the premiums are a lot higher than they are for your term assurance. But whole of life can definitely be useful depending on your circumstances, and this is what I mean when I talk about wealthy people protecting their assets, because one really good reason for having whole of life insurance is to cover an inheritance tax bill. Now I can talk from experience here because, for example, my mum has a big property portfolio which she accumulated over 20 years of property investing. I also have 3 sisters. Now very sadly we lost my dad last year, so it's only mum remaining with all of her property, and I know that one day myself and my 3 sisters are going to inherit those properties if something happens to my mum. Now when mum dies, not only will we inherit the properties, but we'll also have an inheritance tax bill, and quite a hefty one at that. An inheritance tax is a killer because you have to pay it first before you get access to the deceased person's estate, which means that if my mum dies, we have to find the money from somewhere, whether it's our savings or a bank loan or somewhere, to actually pay the inheritance tax before we can inherit the properties. Obviously then once we inherit the properties we might have to sell 1 or 2 of them in order to recoup the amount that we paid to the inheritance tax and pay ourselves back. And obviously we don't want to do that because my parents worked really hard to get all their properties together and to leave us with a really nice nest egg. And of course if we sell some of the properties to pay for the inheritance tax, that's like killing the golden goose, isn't it? So we don't want to do that. So in this example, what mum has done is she's taken out a whole of life insurance policy, and the whole of life insurance policy pays out the amount that we need to pay in inheritance tax if mum dies. Now that's really useful because when she dies we get the insurance payout straight away, we can pay the inheritance tax, and then we can start looking at the properties and take over the running of them and create ourselves an immediate income. So it makes sense, doesn't it? Especially if you have a property portfolio and you have a family that might be inheriting everything from you. Now I will say that you do need proper financial advice if you're going to go down this road with inheritance tax planning, because your policy needs to be written into trust properly and professionally. So inheritance tax planning is one example of how whole of life cover can really help. You might have other reasons, for example the ongoing care of a spouse or a disabled child perhaps. It might be that you want to leave your loved ones with enough to cover your funeral expenses, or it might be that you want to leave them with an actual inheritance because you haven't got very much in savings. But do think about whole of life cover if you definitely want a payout. Okay, let's talk about critical illness cover then. Now this pays out if you're diagnosed with a critical but not always terminal illness. Now as I said before, it often includes things like cancer, but it can also cover you for things like having a limb amputated, which while it's not going to kill you is certainly a massive life-changing event. Now your critical illness policy pays out a smaller amount than life insurance typically, because your life insurance is there for the big stuff like the mortgages and so on, whereas your critical illness policy is there to cover things like any extra costs during your treatment and recuperation. It can include the cost of living if you have to give up your job because of your diagnosis, as well as the cost of any additional or private treatment that you may need. And again, because we don't have a crystal ball, it's a good idea to get some level of cover in place. And if you're not sure, think about your current lifestyle and ask yourself a few questions. Could you and your loved ones live comfortably, for example, if you had to take time off work due to an accident or a sudden diagnosis? And even if you do have quite a bit in savings, do you really want to use all of that money towards your treatment and recuperation? If the answer to any of those questions is no, I definitely recommend seeing a financial advisor about getting some critical illness cover in place. Now, just like the term assurance we talked about, your critical illness cover only covers you for a certain term, and after that no payout will be made, and again your premiums are not refundable. Now I do recommend at the very least you have a think about getting some life insurance and critical illness cover, because it really will give you peace of mind. So for example, I personally have got life insurance and critical illness cover, and so has my husband, because we want to know that if something happens to one of us, the other one will be okay. And that just really helps. It means that we can get on with living the rest of our life while not having to worry about all those kinds of things. So I hope that helps, guys, and gives you a bit of a flavour of what to expect when you're setting up your life and critical illness policies. Do give me a thumbs up if you enjoyed it, and let me know in the comments underneath, have you tried taking out your own life insurance and critical illness policies, and how have you found that? Have a watch of these 2 videos up next because they will help you with your wealth journey. Don't forget to subscribe to the channel, and guys, thank you ever so much for watching this one. Do stay safe, and I'll see you next week.